What is going on, you guys? It's Cody. Welcome back to Stock Talk with Cody. Today we're going to be looking at another sub $5 stock. Not done anything too crazy though. 276 per share. And the reason we're on Robinhood today, I don't usually do Robinhood, but for some reason, when I go to I got my GMGI up here, my favorite stock of all time. When I go to Fidelity and type in Litb. Oh, it did pop up this time. Okay, just kidding. We're not on Robinhood anymore. Welcome to Fidelity. Litb stock we're talking about today. Light in the box. Light in the box reminds me a lot of the of JCPenney type of company. They're based out of China, which is usually a red flag for my investing style because the SEC doesn't have as much ground over there, I guess, to check their financials and everything and make sure that everything's legit. But I do like this stock, and I will get into why here in a second. So we got $2.74 most recent price on this stock here. And let me just go to their website and show you guys kind of what they're about. Light in the box. Here we are. So as you can see, they got they're based out of China, and I believe the website is just doing like an auto. Yeah, it's making it English for me, but most of their company or customers are from China or somewhere around that region. They're a clothing company. They are a clothing company. Pretty cheap clothes too. Men's, women's, wedding and events, shoes, bags, babies, kids. It's literally JCPenney. Literally JCPenney. You can definitely tell they're from China when they have stuff like this. These kind of sweatshirts and whatnot. Type of stuff you might see on Wish. I bet a lot of their stuff does get back ordered to Wish. But anyways, not my type of clothing store per se. I wouldn't definitely use it. However, let me tell you guys, a lot of people are using it, and that is good news for their stock. If we go over to their balance sheet here, all of these numbers are in thousands. I couldn't get their balance sheets from their website because it's like a shopping website, so they don't have a big thing for investors like most other stocks. However, we got the Yahoo Finance here. Looking at the quarterlies, all these numbers are in thousands. So take these numbers times 1,000. Good asset to liability ratio if we're talking about what the company has versus what they owe. Got 158 million, that would be, in total assets at the end of 2020, so about 3 months ago. Now, where this company really strikes me, they've got the... I'm getting a phone call. 1 second. Yo.
Brother, you up? Are you busy?
Yeah, I'm up. I'm recording a video right now.
Oh, are you really? And I'm fucking it up. My bad. Call me later.
Okay, you're good, bro. Bye. That was my friend SB. Shout out SB. You're watching this video. Anyways, where were we? Where we're talking about income for this company. This is insane to me. $398 million in revenue. Okay, and this is annually, of course. So if we go to like the quarterly, from December 31st, 2020, all the earnings reports in China right now are kind of weird because of COVID and stuff. But anyway, December 31st, 2020, we had in that quarter 132 million in revenue alone. Their cost of revenue usually about half the revenue they're bringing in. Very good, making about a 2-to-1 profit margin. Gross profit, they've been profitable. Probably at least for the last year, bringing in tens of millions in profit every quarter. The only thing that I can see bringing the stock down, because if we look at the stock, It's not going to show it on Fidelity. It's got a $330 million market cap, which is odd to me. Usually, if you know anything about value investing, looking at market cap compared to revenue and profits, this is weird. This is very weird. I would expect a market cap of like 1.5 billion, to be honest. If they're bringing in 300 million in revenue every year, maybe a little more, 400 million in revenue. Yeah, about 400 million last year. And then their cost of revenue, just about half that. They brought in 176 million in profit last year. That is a third of their market cap in 1 year. So not only mentioning that stuff, that they have super high revenue, they make money, they're profitable, very profitable. They also are increasing revenue. Look at this, year over year. Revenue increase, which then leads to profit increase, because of course they're, with everything they sell, they're making money, which is what you like to see in a company. The more they sell, the more they make money. Now, for a $330 million market cap on this stock is super surprising to me. If you're a value investor, you should be licking your chops at this. Licking your chops, let me tell you. $2.74 a share. It's prediction time. Financials look strong. They're in a growing online shopping industry in China. Price prediction, I'm going to say market cap. I'm going to stick to that 1.5 billion. I really think this company, $1.5 billion market cap company. I don't see why not. And if we're talking a $1.5 billion market cap on a $300 million market cap at the moment, that's a five-fold increase. We're talking $10 a share, and looking at the share history here, we're on the 1 year chart right now. Let's go back to the 2 year. How about that? Back here, all the way down at like 80 cents a share, even though they've been on the NASDAQ for at least 5 years. They were founded in 2007. I don't know exactly how long they've been on the NASDAQ. They've been on there for at least 5 years. Let's bring up the 10-year chart. Okay, things get messy up there. Probably some stock splits going on and everything. Let's not look at that. Let's go back to this. 2 year chart. We're looking at, this is about when they had their really good 2019 year, right in here. This is 2020. See, I don't understand. I don't understand how it's this low, because you're talking $330 million market cap. They just made a third of that in profit last year alone. I mean, I'm talking, you hold this for a year. It's undervalued right now. You could hold that however long you want. I could definitely see this thing quintupling in value. The highest it's gotten looks like somewhere around $5.70 a share, and it's all the way down to $2.70 a share right now. When we're talking earnings, let me see when those would come out. Okay, we're back to Robinhood. Honestly, I don't like Robinhood for trading. I like Robinhood for their charts and this information here, their earnings and everything. They're expected to release earnings on June 18th. Just dropped their Q4 earnings. That's what we were looking at there on Yahoo, where we looked at their balance sheets, and everything looks strong. They've looked strong for over a year. And super good revenues, growing industry in China. I don't see why you wouldn't buy this stock. As you can see, I already have before in the past. Expected earnings June 18th. So if, could be a good earnings hold as well. Could catch some scanners on their earnings drop. So hold it till that earnings mark. Buying in now seems like a pretty good idea, since they're down quite a bit from that early February run. Again, I'm not a financial advisor. Don't ever do anything with your money that I tell you to do. I never told you to do anything with your money. If anybody asks you, I'm just some idiot on YouTube, okay? However, I am definitely investing in this stock. I'm a value investor. This is insane to me. Look at that. $335 million market cap right there, with $114 million in revenue or something like that, or in profit last year alone. Ridiculously undervalued. If they're not cooking their books, and you never know in China But that's all I got for you guys today. An insane value buy here. $2.76 a share. I'm going to get some clickbait off that. Thank you guys for watching. Thank you so much. We will see you next time.